You're watching Indian Open. With the festive season upon us, the consumption space seems to be looking upbeat. Joining us now to tell us how cheerful Bajaj Electricals is this time around, or this Diwali, we have with us the Managing Director and the Chairman of the company, Shekhar Bajaj. Good morning to you, Mr. Bajaj. Is it going to be a happy Diwali?
I think so. Our September also has been very strong because we are basically concentrating on our secondary sale. So secondary sale across, whether it's appliances or fans or lighting, all have shown positive growths.
So can you give us a little bit more granular detail when you say positive growth? Have you seen sales this September beat, let's say, last year's September, same period last year? Do you think that you might in fact see additional growth this Diwali year on year? Or do you believe that some of the pain from, let's say, the GST related issues or the demon related issues continue to eat into both revenue and profits?
Luckily, we are in the small appliances and fans, which is really not getting impacted. Once the GST is in place, the market is not that vulnerable to small appliances, and therefore secondary sale from September, because July was of course very weak because of the GST coming in, August was stable, and September onward our third quarter, August, October, December should be a very strong quarter, because everything is now, all the problems are behind us. At the dealer level, there are some problems of GST therefore they've given an additional 3 months to make the required for them to make the application, but otherwise in terms of the marketplace there is no restriction and there are no problems, and therefore secondary sales are going extremely strong, and our distribution which we have done over the last 1.5 years is now going to show substantial benefit in the October-December quarter.
For the year gone by, which is FY17, you in fact saw a contraction in revenue down by about 7% or so. The estimates are that you might overcome that and do a 10% increase in revenue for FY18. Are you on course for that, or do you think you might even beat that number?
No, there is a little change which has happened because of GST, that we have decided that we are not increasing our pricing. So therefore, the consumer price remains the same in spite of GST has gone up to 28% in most of our products, but we are absorbing that 1 or 2% by improving our productivity, etc., and cost reduction. So we will not pass it on. But the result of that is, because of earlier the VAT and all was about 14 to 15%, now it's become 28% in most of the appliances and fan. Therefore, our realization, because when we talk about turnover, is on the basis of without tax, and therefore our realization, instead of 100 plus say 18% for the VAT and service tax was 118, now it will be 90 plus 28%. So our realization is anything around 10% lower. So even if I have a growth of 10%, my top line will only show 0 growth. So therefore, if it is showing a 5% growth, one should be happy. It's really a 15% growth. Our bottom line is not going to get impacted because our margin remains the same. Our margin, if it was 10 rupees, it remains 10 rupees on 118 rupees. Only thing is the turnover will show a dip of 10% if we have the same numbers coming up. So luckily the numbers are showing good growth, but the top line may not show such a heavy growth, which really does not matter. So because of that, we may end up,
Yeah, please carry on. Please finish your point, sir.
Yeah, please. Yeah, so I was saying that because of that, we were looking at a 10% growth over the year. It may be maybe 5 or 6%, may not be full 10%, because from July onward the GST has come in. So 9 months my realization will be lower by 10% for the same value and same volume. We will have a 10% lesser top line numbers, and therefore to that extent there may be that 10% growth will not come, but positive growth is definitely expected. In case of EPC, luckily the impact is only 3%. So instead of billing at 100 rupees, now I am billing at 97 rupees. So to that extent, I don't think that 20% growth objective, and we are still looking at from 4,300 crores, we are still looking at a 5,000 crore we have to reach that number anyway.
Yeah, that's what I was going to ask you, because I think there's a brokerage note which says that you would probably reach 5,000 crores. But my question to you was that you've started this range and reach expansion program, which is of course giving you traction in a lot of states which probably were not the strongest for you. That's not coming in at a higher cost? Are you saying your margins will be comfortable at the levels that you have enjoyed in FY17?
Absolutely. There is a cost increase, which is in terms of my fixed cost is going to be there, because I'm going now shop to shop doing the distribution. But because I'm not giving those extra discount which I was giving to wholesalers, my first level margin will more than make up for that. So my first level margin compared to the previous year has gone up by 2 to 3%, and against which if the cost goes up by 1%, I'm still better off by 2%. So once I get my growth, you see EBITDA margins will go up, which was hardly 4-5% last year, will go up to 6-7%, maybe even 8% by end of the year.
New home sales, Mr. Bajaj, in the quarter gone by haven't been great. I think there's a note which said that it were down about 35% quarter-on-quarter basis. How does the lack of real estate demand impact your sales?
See, a lot of our products are going, if there's no new housing coming up, then to that extent we get impacted, because people buy fans, people buy appliances. If they're not going for new housing, obviously those, or lighting even, so that will get impacted. But because of our distribution reach having gone up, we've crossed 1 lakh outlets. By end of the year, we should be having 1,60,000 outlets through which our products will be sold. On a weekly basis, this is called the beat. We go to all the 1 lakh outlet every week, month on month, year on year. So that is why, from the consumer's point of view, the retailers are very, very happy and excited, and therefore to that extent we expect that there will be a double-digit growth coming on third quarter onwards. It will be double-digit, and the fourth quarter may be even better.
Mr. Bajaj, you recently introduced higher premium products through your tie-up with Murphy Richards and Nardi. What has the reception by consumers been for those, and how have those lines fared?
I think personally it was more to give a brand equity that MR Murphy Richards has very, very latest products in the marketplace. I'm not looking at those giving me any numbers that is going to give me any traction that, okay, because of that my sale has gone up by 1 or 2%. Sorry, it is not going to give me those type of numbers. It's only to show that yes, we are higher up in terms of technology. We have good products which are there, but neither world over anybody is expecting that is going to take major share. In India, unfortunately, most of these products are being used by servants, etc. So only those who are housewives who themselves do the cooking, they are the ones who are going to buy it. Those who are depending on servants don't want to buy these high end, because it doesn't really matter. They will buy something which is more robust, more Indian.
Okay, so just to go back to the earlier answer that you gave us, which was your top line net of tax, you said that you were expecting a 5% increase if one was not to factor in the tax bit in your top line. So this is 5% demand increase, or would you be able to give us some sort of volume growth number that might help guide us to understand what the next few quarters would look like?
As I mentioned, that we are looking at the third quarter to be, we are looking at a 10% plus growth coming out of consumer business, and 20% plus coming out of our EPC business. And in the fourth quarter it will be much higher. It's very difficult, nowadays every day things change, so to make a forecast that what's going to happen fourth quarter, but we are still gunning towards that 5,000 crores in spite of the value, my top line getting impacted because of the value of each product which is being sold in the consumer product is down by 10% because of the GST coming in. We still are saying we must try to reach a level of 5,000 crores, which I think would make us feel very excited.
So I have one final question on your project business. I think you already told us that you'd be absorbing the GST cost on that to the effect of about 3% or so, and yet you hope to be able to maintain net margins, EBITDA margins, that is at the company level, at about 5.8 or 6%. Can you give us a sense of what the future of the order book looks like in your EPC or projects business?
See, EPC order book is over 3,500 crores. That is why we are very clear that we should be in a position to have a growth of 20% plus in the EPC business, because whether we like it or not, if we don't do it, we'll get into the LD and other problems will come. So we have to expedite our execution as fast as we can, because the order is not a problem. It's our capacity and capability to get the site available from the government and our capability to be able to execute it fast. So there's enough orders, so I don't see any problem that because of no orders we are not able to go. So that's why I said 20% plus we must grow.
We'll wrap it up here then. Thank you so much, Mr. Bajaj, for joining us. It looks like it will be a good festival season for you and for Bajaj Electricals. Thanks very much for being on BloombergQuint.